Good morning, good afternoon, or good evening, depending on what time you're watching this. It is June 25, Sunday, just around 9 o'clock in the morning, Eastern Coast time. And didn't do a weekend update last week because A, it was Father's Day. I got 9 kids. And B, it was a 3-day weekend, and we had just posted that big euphoric high that we talked about with that SPX 4434. And yeah, it was just one of those things. So here we are. We're back at it again. And this is an unreliable, but at least a little bit of an indication website. It's called Weekend Wall Street. And I shared the image there in the chat room on Saturday morning after all of that heat started to pick up about the Kremlin possibly falling and Putin flying over to St. Petersburg. And yeah, the end result was pretty similar to the movie Die Hard 2, but I think Braveheart sums it up a little bit better here. So, yeah, rip off the U.S. for $6.2 billion, which is an accounting error. Yeah, you guys look like a bunch of fucking idiots. On a, you guys know I'm a non political guy. I think they're all fucking crooks. If you catch the video going around about RFK Jr. over the weekend out there at Muscle Beach bench pressing, motherfucker, man, that is a strong son of a bitch. I'd give him my vote without a question of a doubt. He's the one who's trying to debate on the Joe Rogan show about, that subject that is very touchy. Check it out. Definitely worth watching. So here we go. Last week, Red Week. Finally, a fucking red week. Unbelievable. We went 5 green weeks in a row and finally got that red week. And that red week, last week was only down 48 points. 59-point total range. Absolute crap when it comes to intraday ranges. Gap down every single day. 33 points, 26 points, 30 points, 25 points was the intraday range. So it has shifted. Even though we did get the Green Thursday, which I warned very clearly about on Wednesday, that it was a very strong possibility, playing calls, playing puts, not getting that intraday range that you need in order for them to be as attractive as you would want, because 100% and 200%, I know how frowned upon that number actually is. So when you are taking advantage of it on a spread point of view, and again, how it was very, very clear on Thursday that we were going to be green. We were going to be green right off the bottom of the day at the open and closed up again, as you saw there, only 30 points on the day. But that 43.65, 43.60 was a 150% spread trade over $3 credit because the prior day's close was 43.65. That's how we were able to choose that strike. On Friday, I saw it with my own 2 eyes. The trade I posted out there, the 43.50, 43.45s for $3 credit, they dropped, or sorry, for 250. They were 250 or better credit. They dropped down to a quarter before I shut down and went on my 7-hour road trip. The trade of the week, as everybody knows, the trade of the week, June 23, trade of the week. This email went out minutes after the opening bell on Tuesday. 43.96 the open, and again with the typo because I type American, I don't type English. Over 250, over 100% on the SPX, 4,400, 43.95s. On the SPY, 439, 438. Again, 50 cents was what it was at the time. You would have needed to get 51 cents to actually get 100% because you need to close it out at a penny. And the QQQ 365.98, 368, 367s. And again, would have needed to get the 51 cents, not the 50 cents, in order to get that 100%. So, I'll go around and tell everyone that it was only 98%. It wasn't 100% on the QQQ and SPY. The SPX was over 100%, but it is what it is. But I tell you, I almost thought that I was going to have to live up to my word. On Friday, I posted there in the chat room that if the QQQ closes green, I will drive my fucking motorcycle into a wall because unbelievable. This last red week was OPEX April 21, down 1.5 points. Since then was 1, 2, 3, 4, 5, 6, 7, 8. And on Friday, we got up to 364.88. 365.95 being the candle for the week. And we still have that gap that's up there at 366.17 from Thursday. And I thought to myself, holy shit, I'm going to have to drive my motorcycle into a wall. But nope, we closed down 362.54, almost down 1% on the day as we dip below 1% on the day. But as you can see here, well, you may not be able to see, but I can. The lows of the day on Wednesday, Thursday, Friday, 360.96, 360.22, 360.82. So guess where your breaking point is on QQQ? That's right. It is below 360. Until QQQ is breaking 360, we are still going to be fluttering like a butterfly in a little bit of a garden with some tropical music playing around and some stupid YouTube ads that come in every 5 seconds because, YouTube's got to go make their money. I'll cover on that later on. So again, going back here to the SPX and covering where we are, we had those 5 visits above the COVID lows 100% at 43.74. Suddenly it stopped on Thursday and Friday. And as you can see, as you progressed, since we put in that high 5 days ago, 44, 48, 47, lower lows consistently as we've been progressing through the week. This will lead into what I will start showing in a little bit. We are going to go to the charts, but from a October 2022 low up to that high that we had last week, Friday, 44, 48, 47, 27.4%. Come back over here onto the QQQ. Only from March of this year, it was going back to last week, Friday, 372.85, 30.74%, 87.5 points. Since then, we have dropped to the close 2.77%. Now, we've dropped lower over there on 360.22, but I'm looking here at the close. My calculation is on E278, the close. That's what I'm looking at. Still have the right Fibonacci's here that line up at 329. Should fit. On the year, up 34.95%. So what we are looking at when we go into this Monday, now that there is no coup over there on precious little Putin, I want to make a very strong reminder, and we will cover this until it has broken. May 24, which was the day that we hit 4103.98, when this last wave finalized, was our last minus 1% visit from the previous close during any trading session for now 20 trading sessions. Monday will be number 21. I've given you a summary of what prior very, very long streaks have produced. We are at the upper echelon of that. So during the course of this week, ending June 30th, I am very, very strongly anticipating a minus 1% day from the previous close, which, if we were to get it on Monday, would be 4304.85 as of Monday. Tuesday, we can calculate once we see where the close is at the end of the day. But again, coming back onto the SPX, gap down, gap down, gap down, gap down. What that was giving us over on the VIX was gap up, gap up, gap up, gap up, and all of those gaps were coming down and filling the gap every single day. So I'm going to go over that and try and bring it to everybody's attention, because we'll start out here with the QQQ. Here I'm looking, you know what? I will not start with the QQQ. I'll come back to this. This is the brand new product, brand new VIX 1 day. And since it initiated back here in May, as you can see here, every day it is gapping down and going up, dropping down, going up every single day. It's very, very unreliable. Very unreliable, because it's very fucking clear to everybody that since we've been here in May until last week Friday, all that we have done is grind up. And again, as a reminder, we have not had a minus 1% trading session on the SPX in 20 trading sessions. 20 trading sessions, 5 a week. That's a month. So this VIX 1 day that people talk about, I find it very unreliable, and I don't even bother with it. I've only put it up here now today in order to bring it to your attention and show you. The VIX itself, as you see here, completely different chart, same time frame. We get these gap ups and then we fall down. This one highlight I have here is where the FOMC meeting and the discussion of the FOMC meeting that afternoon was taking place. Excuse me. So 1451 is my personal litmus test breaking point. As long as we remain below 1451, I still find us being at the liberty of the algo gods, which eliminates the ability for us to get that minus 1% day. Down here at 1339 and on new 3-year lows, it's getting to a breaking point as to how long this debauchery of 1 day 0 DTE trading can continue. And I'll bring you on to that, where the SPX and the VIX is calculated based on put and call volume over a 30-day period. So I'm only showing you 10 strikes, and I'm showing you June 26th, which is Monday, and I'm showing you SPY. Okay. And as you can see here, if you can, but you can pull it up yourself, on Friday, you had 217,000, 119,000, 434 and 433 calls for Monday. At the same time, you had 97,000, 156,000, and 90,000 puts for 434, 433, 432. This is for Monday. Now come out to Tuesday. 19,000 is your best number, 28,000 over here, and I can guarantee you those were spreads. Come out to Wednesday, your best number is 18,000, and over here it's 18,000, which is the same strike, which again, I can guarantee you is a spread. Come out to Thursday, and Thursday you have nothing, 9,000, you have 9,000. Again, you can see a spread here without a question when volume is almost identical. And then you come out to June 30th, which again, end of the quarter, end of the first half of the year, end of the month. You would be expecting to see volume like this, 35, 25, 80,000 over here. But that's what you should be seeing regularly as you go out, as we used to have when we had Monday, Wednesday, Friday, when we had only Fridays. Zero DTE is taking all of the attention for all of the volume, and again, trying not to scroll down slowly, but I will speed up to it. On Friday, 7.5 million options traded. Pretty much break even, almost 1-to-1. Zero DTE. Zero DTE is taking 4 million plus, 5 million plus of that volume. And thus, because of that, that is why you are getting your VIX acting the way that it is. When you do have a low VIX, it's very difficult to get that credit on the SPX without being very, very close to where the money is. Or else you're just not going to get the credit, because it's even riskier because of these small little ranges that we have, 32, 26, 30, 25, where, and again, you can look back, we've been doing this for months. We started here in May. In May, we started to compress. In April, in March, we were compressing. We were compressing that intraday range. And then once in a while, getting another day out of here at 50, 60, an occasional 40. But as you can see, even with that, and as difficult of a trading that it is, these yellows highlighted here on the spreads are the spreads that didn't work. And you can see they're either on a Friday or on a Thursday. Fridays and Thursdays is when they're happening. This one here was that skyrocket jack up on June the 2nd, 42.21, 42.41 gap that still is not filled, that rallied past every one of our major extensions because it was an algo day in and of itself, plus 1%. And all of these rolls, I've shared my thoughts about stretching them out to June 30th and letting June 30th take place, which we're going to be having this week. Prior to that, even though, we did have rolls, the rolls were paying out, but we were green. We were constantly green on the spreads. And now that we've compressed as low as we have, it has become a little bit more difficult, but we're still producing the numbers. The numbers are still there. This is a 3.5, 4-day advance notice. Do you want to make 100% on your money? If yes, check this. So I bring you in to where we're at with the SPX. Looking at a 5-day chart, had your high over here at the very start of the day on that Friday last week, June 16th, 44.34 multiple times during the course of the day, and then you're retraced down. You have an unfilled gap here from over the weekend last week. Unfilled gap there. A little tiny unfilled gap on Wednesday. Another unfilled gap that was there on Friday. And we've made it a total of 2.4% to the downside and still have not rejected this 43.36, which, if I can zoom it out a little bit more and leave it on the 5-minute, this is the area that we are continuing to need to confirm. We break down below this 43.36. Then we are looking at the flush, which dedicates itself to getting below the 4300s, as I shared before. 1-day visit, June 9th, and then 3 days, and boom, we're out of the 4300s. 3 days. Right up into the 4400s, open, close, high, low, 1 day there, June 16th. And now we're making the same progression to the downside. 1, 2, 3 days so far that we have open, closed in the 4300s. No 4400 prints. So the next true test is at 43.37. We break the 43.37, we can expect to be seeing that 43.05, and from the 43.05, we already have our downside targets that are down below that in the 4200s. As this month is a 41.83 candle, and we have traded 277 points on the month. Everything has fit to what it needed to be, well advanced of the bullish, which is why we have now shifted over from the bullish view into the big bearish view. And we'll get into that as we start making progress that I shared a couple weeks back. So here we are in the SPX. And again, SPX this week, starting this week, 43.37 is our major break line. As we had these dips during the course of the week and little bits of bounces, we repaired the majority of the medium-term timeframes. The 4-hour is a little bit worrisome, but it still should fit that we should be able to get either a fractional little bounce and a stronger move to the downside, and then we will have no choice except to give in to, the chart gods and respect the fact that we have an overbought or an oversold 4 hour and allow it to do its bounce as it did there on Thursday, as we opened here on the lows and grinded up higher and repaired all of those time frames. The QQQ, different story. Because as I have said, and I will continue to say for months, everything is inside the QQQ. Everything. Right here on the QQQ, your main line, like I showed you over here on our spreadsheet, is 360. 360 is what needs to be broken. 360 gets broken, we already know where our other downside moves are, but 360 needs to get broken. And 360, as you can see here, is the same as that SPX 4337. Right there. Same day, same low. Get down below this 360. We've got the 20-day moving average here. However, this blue line that you're looking at here, and this is where I'm going to go into the how did we get here. This blue line right here is the 400-day moving average. All right. Now, come over here onto your SPX. And what you're looking at here on the SPX is, let me drop it down. What you're looking here at the SPX is the RSI 5, and as you can see, stupid, ridiculously fucking overbought, above 90, and we've started to shut off. We're down to 44 as of right now, but as you can see, we've come back down into this area, and we need to break that 43.37. This here is your 50-day moving average. It's at 42.02. So for a number of very obvious reasons, there is no expectation whatsoever that we are going to break that 50-day moving average. However, what I am now going to zoom in and highlight is, as you see here on your MACD, your bearish crossover. As you see here on your true strength indicator, true strength index, your bearish crossover. And over here, top of February, you see your price action. Now you come over here into April, right here into that third week of April, and you had your bearish cross extremely on the MACD. We dropped right down there to 44.49. You had the exact same thing over here on the true strength index. On the NASDAQ, again, where we are, 50-day moving average down here, 13,800. Come over here and again, zoom in. As you were here in February, bearish crossovers on the MACD. Bearish crossover on the true strength index. You see your result. You had your top there on the February, and then you had your move down over here into March. Crossover, bullish. Crossover, bullish. And we had our bounce. And as we came into April, which April comes after March. March is the end of the first quarter. We go into the first 2 weeks, and then the banks start to report their earnings. We go into the third week, and we start to get one or two companies, Tesla, Netflix. And as we come in here down into May, and as you see here, this drop off right here, as we're getting into the end of April, right there, that final week of April, right here. And you see, you have a confirmed bearish cross. You're bearish, you're crossed. And they invent the word AI. And when that word AI got it introduced and got invented, which has been around for 30 fucking years, and all of a sudden somebody said, dude, I said AI and she paid for the dinner. Dude, I said AI, she let me use her car. They all started doing the same fucking thing. AI, 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 AI. And you come over on your QQQ, okay, again, we're staying on the same subject. We're staying on this. What I showed you over here on the QQQ, right? With this being the 400-day moving average, which is rolling down, as you can kind of see, if you can see it. It's rolling down. Here's your 400-day moving average on a much wider time frame, looking at this from a 1 year or 5 year. We crashed down here in 2018. After that high over there in September, October, down to the December Christmas Eve, December 26th, bottom. You see how we broke the 400-day moving average here. What I will do is zoom in because we're definitely going to make this something that you need to see because you're playing a video game. We came down to the 400-day moving average there in October, November, and we bounced up. Then we came down there, and just prior to December, that was when Donald Trump made the deal with China, the weekend beginning December, and the market said, but we're raising interest rates way too fast, and we crashed. We broke down below that 400-day moving average, and it is clearly a big buy signal. Had our rally, the PPT rally over here in 2019, up to the highs over here in June 2019, and then we had our decline. And our decline came down and precisely to that 400-day moving average. Then you went off into the clear blue skies, George Strait, to COVID. From COVID, you had that very quick drop. And where did that drop come to? It broke below the 400-day moving average and immediately bounced right back off of that. So then you cruise around and you cruise around and you cruise around and you get over here into last year. And last year you start coming down on the 400-day moving average as you're going into the March lows, the mid-March lows, and then the skyrocket bounce off of that 400-day moving average, and then the crash after that March high. Crashed down below it, came back up, and as you see over here in August, again, right up into it in August, and then crashed down. So where I'm zooming in here, because again, this is more of an explanation of how everybody got screwed up than anything else. This is where we were right here on that 400-day moving average for multiple days in April as we had those sell signals right on that 400-day moving average, just getting denied. And then they invented the word AI, and here you are. So from a common sense point of view, common sense, you're doggy style, you slip out, you put it in the wrong hole. You can do that once. You ain't going to get away with it a second time. And we've got earnings coming up here in July. And I can bet you my mother's favorite possessions, they are not going to let that AI bullshit happen again when we start getting earnings end of July, as they already did this one time. It ain't going to happen. So I bring you over here to the Dow Jones. And the Dow Jones, this is coming back from December. December highs, fractionally higher than where we are right now. Coming on to the 50-day moving average, obviously a very clear sell down that's been taking place for over a week now. And this red line that you have here, the red line is the year-to-date open, as we had going back prior to last week Friday, or the prior week, whatever fucking week it was, going back in the beginning of the month. Negative on the year. Negative on the year. And all of a sudden, June starts. You had the same thing over here with the Russell 2000, IWM. Negative on the year. You couldn't get this thing to climb out of a fucking bucket of cream and make butter out of it, like over there in, Catch Me If You Can. Couldn't do it. This thing was bouncing here, that 169, 179, 169, 179, and then June started. And oh my God, let's look at this. We're green. We're green year to date. And over here you are with the oversold daily on the RSI 5 and coming right back down to this breaking point of this 180. What used to be support and then was resistance and is now going to be tested And if this resistance support fails, it becomes resistance again. And you're looking at the 50-day moving average and going red on the year once again. So I'll leave you with this. I'm going to go through these 7, 8, whatever number it is, weighted stocks that have had 98% of the impact on the SPX for the year. Without them, the SPX is trading at 3,900. With them, we are trading at what you saw on Friday, 43.48. Here's NVIDIA. Major gap over here from earnings when they invented the word AI. I didn't pull the chart up. I can if you want to, but I didn't pull it up. This gap, AMD took advantage of that gap. AMD closed that gap on Friday, down to 108.50. NVIDIA has not. So my resistance line that I prior had was that 285 or 295. And I've got the red line drawn there right there where 295 is, which also fills the gap. You're looking at the 50-day moving average here, which is just a boner skyrocket. It's going to take a lot for this NVIDIA to, it's a Ponzi scheme. It's a scam. It's a complete scam. For it to come down and break that 50-day moving average is going to take a hell of a lot of work. But what you do have below that is both that big gap that needs to be filled for earnings as we look out to September. And then you have what is now 50% from the all-time highs. A drop 50% from 440 would bring you down to 220, which was your support area over here in March, prior to the first time they invented AI, which, as you see here in April, didn't do much for them back here in March. And then all of a sudden, when they introduced it here in May, look at this. We've invented a new word. It works. Here's your earnings gap up over here back at the end of February, 238.81. Come over onto Meta, and oh my God, man, I fucking hate this company so much. But now this thing supposedly is real, that Mark Zuckerberg and Elon Musk are going to have a cage match, a UFC MMA cage match. Meta doesn't care. Meta has had a sell divergence running on it since the beginning of June. Meta doesn't care. I put here the 20-day moving average because it's been very clear throughout the course of this year that 20-day moving average is not going to get broken. So with the 20-day moving average currently at 272, even though that's only 16 points away from where it closed, I would not expect it to be breaking down below that 20-day moving average. You've got this major line over here, which is 236.11, and then quite obviously this 175 down here with a big gap that needs to be filled from back at the end of January, beginning of February when they reported. And it's just, I have no idea how this company even makes money because there's only, selfish fucking people posting Instagram selfies and all kinds of bullshit advertisements on it. And Facebook, which is what, fucking Asians chatting to each other, wearing fucking face masks on their profile pictures. Apple, again, Apple here using 20-day moving average. Apple is Apple. Apple's the number one, the big dog, just at the $3 trillion mark and hanging on to it. Overbought, ridiculously overbought. Been up here overbought. It's not making any difference. 182 is your spot. 175, 172.50 is really your primary support level. You've got your gap up from when they did not say AI, but they implemented AI when they reported their earnings back here in the beginning of May. And obviously, it is what it is with Apple. Again, number one, number two weighted big dog. Tesla. Have you ever seen anything that overbought? This thing had a run equal to the QQQ in number of weeks that it was green, number of days that it was green. And again, over here on Tesla, you've had your big run, you've extended yourself, and now it's time to come back to reality, somewhere right there around that 220 level, where your 50-day moving average is clearly moving up, right around 196. But yeah, I would be looking for Tesla to be testing down there around that 220 area. Come on to Microsoft. And again, Microsoft, Apple, same thing, potato. Over here, end of April, invented the word AI. Bang, big gap up. been cruising and moving to the upside just now coming onto their 20-day moving average, which they've tested a couple of times very briefly at the beginning in early part of June. 20-day moving average here, but yeah, you've pretty much got this, what is it, 326? 326.50, I think is what the pivot is, just underneath it. And as of on the close, just below the 2022 open is where it is. So anyway, Microsoft is Microsoft, and everybody knows that after you look at the RFK Jr. images that are going around over the weekend, Bill Gates is a health expert, and he's got bigger tits than my wife. Google, this thing's just been sell divergence in your face, don't give a shit. Again, sorry, I didn't zoom down on these charts, but if I have to, I'll go back and I will. Confirmed sell signals beginning of June. You had the same thing back here in April. I apologize. That was what I wanted to show to everybody, how you had these confirmed sell signals over here in April. All of them, every one of them, major confirmations on sell signals in April. And the QQQ decided to take that word AI. Much different chart over here on Apple, been very independent. Meta, again, same thing because of the grind up, but you still had confirmed sell signals, and then they go and invent the words AI. So back to where we were. Google, you've had this running sell divergence over here on the daily, and it's done absolutely nothing. But again, here is your AI gap up, which is unfilled right below 115. And then you've got this 108, 109 resistance from before, which will be there to be tested for support as 116 right here on the 50-day moving average. But you look at this. I mean, you've got screaming sell signals in front of your face, and the stock price isn't going anywhere. So I leave you with Amazon, and Amazon 109.30 was my big line. It was actually one of my predictions for the beginning of the year. All of them were on my predictions for the beginning of the year. All of them got broken back in March. Amazon up here, very bullish still riding well above that 50-day moving average. But again, you already have what is beginning to be from the middle of last week, the week prior to the week we just traded, sell signals on your MACD and on your True Strength Index, and you're not getting any price action to confirm that to bring it down to around that 120 level. So that's what I leave you with, is we are going to make a bucket of money this week. We are going to make a bucket of money. I very obviously want to see 42.85, 42.80 get broken, and I shared with you the July 7th trade. Shared it in the email, shared it in the spread room. I'll share it again. Definitely with 20 trading sessions complete without a minus 1% decline, you are knocking on heaven's door for that minus 1% day to take place. Should it happen here on Monday, you are looking at that 43.04.85 for minus 1%. That is your open over here on June 9th, which was a gap up. That was your low over here on June 12th, which breaks you down to get down into that 42.21, 42.41 gap of 20 points from the very beginning of the month when the full moon took place. Have a super incredible, fantastic Sunday. I will see you in the chat room. For those of you that are not members and you're seeing this late, doors open, dude. All you got to do is ask.